Hey everyone, Cash Investor back to another video for today. So let's talk a bit about the current state of Intel as we're approaching earnings season. I believe they released their earnings report on October 25th or 26th. I'll definitely share that on this channel. Now, Intel currently is still, in my opinion, in my book, still in that show me what you've got, show me you can turn this huge company around. Of course, last quarter was a bit better than what was expected. Same could be said for guidance. Now, just because one quarter, one guidance was okay, better than feared, does not make this now a no-brainer. No, there's still a long road ahead. Of course, for the whole PC market, there are still some struggles there. We're going to talk about that in this video and some other stuff as well, the chart in the end. But first, let's have a look at the current state of the stock. So, by the way, yeah, October 26th, earnings date, market cap $150 billion. If you look at the year-to-date returns, of course, because of the, let's say, change in sentiment, let's say momentum, it's up close to 40%. Now looking in the last 5 years, I do 5 years, not 10 years, because different companies, different stages of their life cycle. So PE ratio, EV to EBITDA, price to sales, price to free cash flow, of course, free cash flow, well, it stopped already a while ago. So currently, we can see that PE, it is way more expensive than its mean for the last 5 years. We're now at 29.7 times, mean was 17 times. EV to EBITDA, same thing there, 12 times, mean 8 times. But the only one that is under is price to sales. The mean was 2.9, we're now at 2.7. But of course, we know why this is happening. This stock, as we've seen, has been performing much better this year. It's up close to 40%. But the business itself fundamentally has become less profitable. Yes, we've seen some little improvements already last quarter, and with guidance as well, we might see another good-ish quarter or better than feared quarter, which might make this valuation now a bit cheaper as well. Again, it all depends on execution right now for Intel, because they have been making certain moves that were questionable at first, but now, hey, things are starting to look a bit brighter. Now, of course, not everything is in Intel's hand. Same thing can be said with AMD and with Nvidia. Now, of course, we had that huge push during the pandemic, right? There was also chip shortages, etc., but we've got that huge push back in 2019, 2020, and a bit 2021. And so, since then, well, PC shipments have been in a decline for 8 consecutive quarters. And with regards to Q3, well, that is down 9%. And yes, for those that are interested, Apple, that's down over 24%. Now, if we scroll a bit down, we have some good-ish news. So the good news for PC vendors is that the worst could be over by the end of 2023. The business PC market is ready for the next replacement cycle. Driven by the Windows 11 upgrades, consumer PC demand should also begin to recover as PCs purchased during the pandemic are entering the early stages of a refresh cycle. Of course, with all the releases that are planned for Intel, for AMD, that might also push demand. Now, if you're interested more specifically, the US PC market that declined 9.3% in the third quarter, so a bit more than the worldwide one. Now, for those that needed a little reminder, those were the numbers for Q2, so revenue just under $13 billion, gross margin just under 40%, and EPS of 13 cents. As for the outlook, they are expecting improvements across the board. Gross margin 43%. Remember, we are coming from over 50% gross margins in the past. We're still way below that. EPS is a bit higher as well, but still down 46% year over year. And revenue, there have been some indications that probably they'll beat their own expectations. Now, of course, do share your thoughts down in the comments below. Now, before I continue, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not. Really appreciate that. We're trying to reach 30,000 subscribers, so let's try and do it before the end of the month. Thank you very much. And if you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Now, Intel has said, management has said that they are trying different tactics to raise money, strategic partnerships, etc. One of them, obviously, the Mobileye IPO. then selling off parts of their businesses as well. And we had that announcement at the beginning of October. So they announced the intent to operate Programmable Solution Group, or PSG, not the football club, as standalone business under leadership of Sandra Rivera. So they say here that standalone operations for PSG are expected to begin January 1st, 2024, with ongoing support from Intel. Intel expects to report PSG as a separate business unit when it releases first quarter 2024 financials. Now, the announcement follows successful completion of IPO of Intel's Mobileye business in 2022, as well as announced private investment by Bain Capital's Special Situations and TSMC into Intel's IMS nanofabrication subsidiary. So again, they are pulling some levers left, right, and center. As for some big announcements that were made in September, this in my opinion was the biggest one. So Intel unveils industry-leading glass substrates to meet demand for more powerful compute. Now, why does it matter? They basically say it here. Compared to today's organic substrates, glass offers distinctive properties such as ultra-low flatness and better thermal and mechanical stability, resulting in much higher interconnect density in a substrate. These benefits will allow chip architects to create high-density, high-performance chip packages for data-intensive workloads, such as, of course, artificial intelligence. Some of you might remember my video about Amazon, their investment in diamonds, lab-grown diamonds, to be used for such things. I mean, diamonds could be the ultimate semiconductor. Moving on to the last two things I want to touch on. One is the graph, which we'll do in just a bit. The other one is what the market, what me as an investor is expecting from Intel towards the back half of 2023. Well, number one, and that's actually the one main point here, maybe 2 points. One, margin improvements, and two, announce already a big customer for the foundry business. Because I do think that the market is still waiting to hear who's that customer that they've been hinting a bit in the past. Who is it? Is it a huge player, or is it a medium to small type of player? I think that's what the market is missing right now. But hey, margin improvements is already a good step forward. Let's wait and see what the results will give, and then guidance as well. And then the other one is announcing that huge customer. Who do you think might be the first huge foundry customer? Let me know down in the comments below. Now, last thing here is the graph. We had that bottom at around $25. Since then, it has gone up, like we said, close to 40%. We had a little rejection here at around $40 or so. Currently, we are sitting quite comfortably waiting for the next results at around $36 for quite a while now. So really nothing much more to add here. RSI is still pretty neutral. Stock sits above the 20, 50 and the 200-day moving average for now on the weekly chart. So to conclude, while Intel right now is doing a bit better than before, there is still a long way to go to still become that number one player, that leadership company that they've been talking about for a couple of years now since Pat came back. But I do like the direction that they're going in. That said, there's still a lot to prove. Of course, do share your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.